Well, all eyes will be on the Fed meet that begins today. Mark Matthews of Bank Julius Baer says that the market is not looking for any surprises, that a rate hike is almost a given, and that the commentary from the Fed itself may also be discounted given the uncertainty regarding Yellen's continuation.
That won't be a surprise. The only surprise would be if they decided not to raise rates, which, I mean, the Fed in the past threatened to raise rates and then they didn't, so it may be this time they're not going to. I think, the markets have really already priced it in, as you can see with the rise in the dollar since the election and the rise in the Treasury yield. So I don't think the market would be surprised unless, it was something exceptionally hawkish. I mean, I think right now the market is inferring this rate hike and then another 2 next year, maybe 3. So if they said they were going to do, I don't know, say 5, then that would be a shock, but I don't think they will. We continue to like China and India, and they're both very different, but I think, those are our 2 favorites in the emerging space. I mean, with the banks, I take a more sanguine view. I think that the demonetization process will be, I think we'll look back in a few months and it won't be as bad as we thought. We're seeing now that a lot of the money is actually going into accounts, so I'm guessing those are poor people's accounts, and it's probably shouldn't. But anyway, I'm not really giving you a well-rounded answer, but I'm not I'm not pessimistic on India, but I think the demonetization might weigh on sentiment for a few more months.
All right, and here's a big CNBC